Thursday, September 5th, we've got, I'm going to pause this. I'm playing the replay about 10 minutes after the open where they'll break out through 69 that I got a partial fill on. Some other people caught it, but there was a breakout coming. We had a gap open higher. So if you can't go down pretty quickly after the open, you got to assume you got a lot of stuck shorts that create the buying that shoot us up. So in this consolidation, and that's what this is, just look at this as the market walking back and forth. It's got a ceiling up here, and it's got buy stops up here. It's got shorts that might say, holy, you know what, and start buying it. Plus 68.5, you had some edge zone selling. And so once you kind of creeped above there, if you weren't trying to buy it and get long, you certainly, if you've been around me, weren't trying to get short either. And so saving money is like making money. So let me go ahead and play this thing.
7.75.
You can see again, it's banging back and forth. You're going to hear a male voice when there's buying, a female voice when there's imbalanced selling. Red for selling, green for buying. You can see 68 evens kind of get sold. They walk through it. These two, 68 3/4, 68 quarters. Wham, they go through that.
Even 3/4.
Right. So you don't necessarily have to be buying it, but you'd be like, hey, if you're watching a TV show, the music starts playing, you know to pay attention, right? There's a reason for that. To play the music in the background, something's going to happen. He broke in. Let me pause it. He broke in. He's ready to run up the stairs and start stabbing her. So you play it again in here. Look at all these rotation highs. I bid it back. I'll stop it because it already ran up. I bid it back. They gave me a partial fill and then took off. I was like the last little bit to get filled. I said it was the bread wasn't even big enough to put butter on it. But I'm not going to complain. It runs up effortless. Some guys caught it by being long on this sequence where it ran up. So you get this big jump. You got to take these circles, though, and understand this. Number one, it was a bullish gap open. And after the open, if you don't start closing that gap, shorts get the big grapefruit eyes. Second thing is you identified a congestion box, and that was buy stops above. Third thing was you had sellers that once it got above there, was a chance to do this. That simple. So when you overlap these three circles, like all in here, that's where your advantages are. That's where your probabilities come from, not just one. So when you build strategies, when you review strategies, when you trade strategies, you want to bring in more than just price in the market that you're trading. Also, an ancillary would have helped. Yen go down, bonds go down, NASDAQ maybe run up or have the same kind of congestion box. What do I mean by congestion box? That right here. That's a box. Why? Because these are footprints, but all they are rotational columns. Market goes up, market comes down. Bam, market runs up really fast and furious. So that's the highlight of the day in real time, going and walking through it. But then when we go, couple things that were also important that I have to mention. Crude oil had inventory numbers that generally come out on Wednesdays at 9:30 Central. Because of our Labor Day holiday, came out today at 10 Central. Why is crude oil important even if you don't trade crude oil? Because crude oil, when it moves a lot and fast, does have influence on stock indexes. If you don't believe me, then stop watching because it's true. Oil affects the energy sector, which is like the number 2 weighted space or sector in the S&P 500. So oil gets strong, energy sector gets strong, S&Ps are going to get strong. And if you look at this, take a look at this right in here. 10 o'clock Central. Again, it's usually 9:30 Central on Wednesdays. 10. If you're an oil trader, you have to know about this. But if you're an S&P trader, you should know about this. So 10 a.m. because of the Monday holiday, it got released today. Do you think that this was a coincidence right in here? There. Look at the right side. That spike there, is that a coincidence? 79 halves were easy to buy. And then immediately went 8 ticks your way.
Even quarter.
Immediately went 8 ticks your way.
Even quarter.
Anybody that would tell me,
Even quarter.
and I'll tell this joke again, but anybody that would tell me 8 ticks isn't enough,
Even quarter.
got to get their head examined. I had a guy a long time ago, I think his name was Don. He says, Anthony, you look for 2 or 3 points. I'm looking for 10 points. I says, Don, I'd like 2 blondes and a brunette. It just ain't that practical. It ain't that realistic. 10 points. All in, all out for 10 points. Maybe on the last part of your scale, all in, all out for 10 points.
Even quarter.
I made an appointment with a neurosurgeon.
Even quarter.
But anyhow, that you got this market that just in oil ran up
Even quarter.
really hard. Let me show
Even
you. This is
quarter.
crude oil at 10 Central. Do you think that from 56.96, that's where it was right before 10 a.m.? Bullish number, bam, bam. Do you think that's a coincidence? They run up 40 or 50 cents,
Evens.
and the S&P, look at this side right here,
Evens.
does this.
Evens.
Cause and effect. You got to know the correlation. You got to know what's coming out. You know, it should be easy because I preview I preview these numbers. I said, number one, oil's supposed to come out at -2 million. Number two,
9.5.
the other agency that
9.5.
reports yesterday
9.5.
came in with a build of up 0.5 million. So oil traders are all thinking it should be a build based on the API stats the day before. They always come out a day before, this Department of Energy. So the market's already leaning towards maybe a build. The consensus is for a -2 million draw, and they got a -4.5 million draw. What does that mean?
9 3/4.
Less supply, higher
9
price. That's why
3/4.
they spiked them 50 cents like that in crude. It affects the energy sector. Take a look at the XLE. If you got data
9
for
3/4.
stock symbols, XLE
9
is the
3/4.
ETF for energy sector.
9
Take a look at
3/4.
It ran up,
9
and that influences the
9
S&P 500.
3/4.
So if you
9
can get
3/4.
effortless
9
6, 8
3/4.
tick, even 3 tick, effortless head starts, the rest is easy. That's what you're always looking for, location, so you could get paid right away. The 10-point winner stuff, forget about
9
that.
3/4.
You're only going to get
9
that
3/4.
on a scale type
9
strategy,
3/4.
or if you're a super long time frame
9
investor, not
3/4.
trader. But
9
intraday looking for
3/4.
10 points,
9 3/4. 9
knucklehead.
3/4. 9 3/4.
not practical.
9 3/4.
And I say these
9
jokes
3/4.
so it sticks,
9
I think, in
3/4.
people's head. They remember it better.
9 3/4.
Relationships are important,
9 3/4.
and a lot of people wouldn't think, well, how will
9
oil affect the
3/4.
S&P? There's an example of it.
9 3/4. 9 3/4.